Hi, Larry Gaines, PowerCycleTrading.com. In this video, I want to step you through kind of a trading process that I like to use for every trade setup that I'm looking at. And then I'll show you the trade that we're currently into that's based on this process. So first off though, step one, I like to identify and use chart patterns. So I have 5 different chart patterns that I'll look at that are really high winning kind of probability chart patterns for reversal and breakout type trades. So that's step one. And then step two, I'm going to use my trading model to make the trade entries and exits out of a specific trade setup that we've identified based on the chart pattern. So this also keeps it very systematic. And the trading model is based on using momentum for direction. So that's step two. And then step three is really important, is what I call price target mapping for all trades. And this is a process that I've put together and developed that will help you to analyze based on using Fibonacci price target analysis, moving averages, or what I refer to as automated trend lines, price action support resistance levels, and also then we use standard deviation target forecasting and option activity. So it's very important to have targets laid out for your profit, for your defense, for your stop loss levels. So that's a very important step three. And then step four, then finally we're going to look to establish what option series that we want to use for our profit targets based on this target mapping process. And then step five, finally select the option strategy to use based on the chart pattern. So the various strategies that we'll typically use would be a vertical debit spread, or wide wing butterflies, or long condors, or calendar diagonals. So look at the different strategies, option strategies based on the market condition and the pattern. 6, finally, have your management plan established. Where are you going to take profits? That's where that target mapping really comes in and is very crucial. And then where's your kind of what I call post-trade defense triggers for either stop loss or defending. And then finally you get to execute the trade and manage it. So it's a 7-step process that you go through before you even put the trade on. So let's take a look at what we've done here based on this process on Apple. So here's Apple. First off, we had a big sell-off here from that high back in September to the low that we had towards the end of September. We had a push back up, pull back. So you can see this cycling up and down, up and down. Now this is what we call a cycle reversal pattern. So you can see that our reversal indicator down here for 1 is giving us the indication for a change in cycle. Now we've got cycle 1 and 2, that's directional momentum showing upside potential for this trade movement. And you can see the arrows are pointing there. And then we've got moving average crosses hitting. And then finally we're going into and through certain key Fibonacci levels. So here's a 50% retracement level. And then we've got a target. So based on also Fibonacci target pricing extensions, we've got a target here to first target would be 125, then towards this 127, and then towards kind of 130, 131. So that's price target mapping. So then we can develop a strategy to use. Now the next thing is then what strategy. So we started this trade out with a calendar, and then we're going to look to convert it to a call debit spread or maybe a butterfly. So I'll show you the trade setup, and that's kind of the process that we use. So one more thing are trend lines. So we have a pennant formation here, so breakout pattern on that. So reversal with a breakout. So we established the trade here on the 30th, and then the trade setup was we started with a calendar, and then we converted to a calendar diagonal, and then potential to convert it once again for a bigger move to the upside. So started the trade out as a calendar and then made this adjustment. So converted it to a calendar diagonal. So we're long the 18 December 122 call, sold the 4 December, which is expiration this week, 126 against it. So we're into this calendar, what we call a calendar diagonal, and the debit paid is the total risk. Now you can see we're up here today at about $104 on the close. So the thing that we can do here is trading right here. We can take some profit here or take all the profit for an income trade. So pretty decent return there. So that's what we call the income trade side. But the other thing that we'll probably do, since I think there's a good potential to push back up here towards this 127, 130 level, is to convert this and create what we call just a call debit spread. So this is how this would work out. So then coming into this Friday, the 4th, if it's Apple's trade below 126, it's currently trading at 123, we will keep the $41 credit, and that would reduce this call side down, and we'd have an adjusted price of 263. So then what we'll do is we'll have a long the 18 December at 122 call at 263, and then we can convert this to a call debit spread or a butterfly. So we could sell the 130 against it, or 125. We could have a nice call debit spread, something like this, and have a really great low risk trade, $16 of risk and potential to make over 280. So a lot of different things, but it's a process that I use for each and every trade, and one big part of that is trade selection and then what we call price target mapping. Hope this helps. I'll talk to you on my next video update.